This video is just basically how to trade a channel and understanding these concepts, and I'm just going to simplify things. It's just basically support and resistance. You're looking at ranges of prices. So for instance, if you're looking for a sideways channel, basically a consolidation, you're just looking for a support on the bottom, resistance at the top. So when price gets to that area, you look for reversal candlestick patterns or entry points as closest to the support level as possible. So once the market decides range, here's your support, here's your support again, that would be your entry point, trend back to the top of the consolidation. And then vice versa on the top, you're looking for entry point at the top and looking to trade back down towards the bottom of the range. And then once it breaks outside that channel, then you're just looking for that breakout trade, breaking and continuing on the downward swing, and then creating another possible channel. So let's look at this currency pair. To identify a channel in a diagonal manner, you're just using two trend lines, one on the bottom of the candlesticks, and then on the top, this is the top of the channel. So you can see that price is respected this price, this price, this price. So once you can identify the bottom part of the channel, then what you're looking for is a reversal candlestick pattern or formation and a close of the candle right there, stop loss behind the swing low, and trading it back towards that top of that price. Now, the way you want to trade the channel is to trade back into the trend versus trading against it. You can trade from the top of the channel back down towards the other trend line. You're just not going to get that much out of it. So for instance, your entry point would be the close against that the price right here, and stop loss above here, trading back towards the channel, which again it's not as profitable. So you can see with these candlesticks right here, long wick up, here's your entry point right here, or even this candlestick here, stop loss right there, trading it back towards the top of the channel as your exit strategy. And then once the trend line breaks, either way, breaking downwards, you can look for the breakout, the retest, to trade it back down to the origination point of the trend line. If it breaks the top of the channel, it's not as reliable. Only if it is on an extremely strong trend on a bigger time frame, then it may work out. Trading back up to another support resistance level, typically you would have your stop loss behind the support resistance level or the break of the channel, whatever support level that you can identify. So this is just a little bit about channels and channel trading. It's basically using trend lines, support resistance lines to help you identify those stop loss and take profit areas. And channels do appear on any currency pair, any time frame, and again, it's actually a group of candlesticks in order for it to form. It's not just one candlestick or an actual pattern. It's a little bit bigger than that. It takes maybe a day or two, or depending on what time frame you're looking at. If you're looking at a 5-minute chart, it may take a day or two to develop. So you have a smaller channel right here, for instance, and trading upwards on a smaller time frame. But on a bigger time frame, they may take like a week or two to develop these channels, and that would just help you see more of what a channel looks like and how to trade it. Thank you very much.